Hey, I'm Steven and this is Solving the Money Problem. If you're new to the channel, welcome. For everyone else, I'm glad you're back. I've been reading all of your comments and I've noticed a lot of you guys are saying that you're waiting for the next dip in Tesla's stock price before buying. Well, I don't have a crystal ball, but I do have a brain, and so do you. So let's fire up our neurons together and attempt to deduce the most probable near-term direction of Tesla's stock price. Spoiler alert, it's not down. Now, I can't see into the future. This video isn't a claim about what will happen to Tesla's stock price. Anything could happen. I'm just looking at the facts and doing my best to understand the most likely outcome. Tesla has a slew of good news on the horizon. Unless something unforeseen and unexpected occurs, like Elon dropping acid with Joe Rogan or somebody turning off the simulation, it seems improbable that Tesla stock will trend any direction but up. The tailwinds are simply too strong. Let's look at why. Q4 is going to break almost every record ever. Tesla will almost certainly report record production, record deliveries, record revenue, and a record order backlog in Q4 2019. This would be good news. And depending on the timing of the first made-in-China Model 3 deliveries from Gigafactory 3, Tesla is likely to also report record cash and record profits for the quarter. This would be good news. The Model Y ramp. The Model Y was revealed in May of 2019 to little fanfare, despite its potential to outsell the Models S, 3, and X combined. Thanks to sharing around 3/4 of its parts with the Model 3, and to how quickly Tesla learn and adapt, the Model Y ramp is eons ahead of schedule. We were originally told to expect Model Y production in late 2020. Since then, Tesla has reported in their Q3 2019 results that the Model Y ramp was ahead of schedule and production was expected to begin by mid-2020. Following that, a rumor leaked that Model Y production would start as early as Q1 2020. Soon after that, a Taiwanese website reported that Tesla suppliers had been told to expedite Model Y parts 6 months earlier than expected, which puts the timing of the Model Y production at Q4 2019 or Q1 2020. This would be good news. Gigafactory 3 production. Gigafactory 3 was built in record time, from mud pit to commencing trial production in 10 months flat. It's absolutely mind-boggling to see how quick Tesla got shit done in China. And thanks to the drone-flying Tesla fanboys, P.S. I love you guys, who've been documenting the entire construction process, we know Tesla's parking lot started filling up with Model Ys weeks ago, and production is ramping steadily. The guys over at the EV Stock Channel estimate Tesla is already producing Model 3s at a rate of over 1,000 per month. Tesla took about 6 months to ramp to the same level of Model 3 production in the US. In China, it's taken 1 month. The made-in-China Model 3s have been seen being loaded onto trucks. This indicates that deliveries will commence soon. This will be good news. With higher pricing than the equivalent US vehicles, plus much lower labour costs in China, it seems likely that the made-in-China Model 3s will have very healthy margins once volume production is underway. And don't think that Tesla isn't preparing to ramp Model Y production in Shanghai too. Tesla and China are sleeping together. Let's not beat around the bush. Tesla and China are in the midst of a beautiful romance. The scientifically literate Chinese government really want EVs to succeed, and fast. They've opened doors, expedited processes, made exemptions, and basically done everything within their means to help Tesla. First, Tesla gained approval to solely own and operate their factory in Shanghai, while typically, foreign companies must partner with a local Chinese company. Then, Tesla was offered finance to build Gigafactory 3 at below market rates by a group of local lenders. Then, Tesla received an exemption on sales taxes on their imported vehicles. And finally, made-in-China Model 3 was added to a list of EVs recommended for the new energy vehicle subsidies. Premium subscriptions. Tesla has just announced that it will begin charging for premium connectivity, which includes music streaming, live traffic, karaoke, internet browsing, and more. For every 100,000 owners who subscribe, that's another 12 million in annual revenue. This is good news. The Tesla Semi. Tesla has confirmed that limited production of the Semi will commence in 2020. I suspect most of these initial trucks will be used by Tesla itself, thus lowering transport costs within their business, which adds more to the bottom line. Because of the commercial nature of the Semi, it's getting almost zero airtime despite having an enormous market and a huge average sale price. The Semi is a total sleeper product. Think about it. 68% of the goods in the United States are transported by semis with high fuel and maintenance costs. The business case for the cost savings of an efficient electric semi is compelling. Commercial customers are frothing at the mouth to get their hands on these things. Tesla already has orders from Walmart, Pepsi, FedEx, UPS, DHL, and loads more. Gigafactory 4. The recently announced Berlin Gigafactory will be moving ahead as fast as Tesla can make it happen. Once complete, the made in Europe Teslas will bring costs down and margins up. This will be good news. Battery and Powertrain Investor Day. In early 2020, Tesla is hosting a Battery and Powertrain Investor Day. Let me save you the time. Tesla will detail how embarrassingly far ahead their current battery and powertrains are. We already know this. Then, they'll talk about the next generation of each, and our jaws will be left on the floor. The recent acquisition of Maxwell Technologies and Hybar Systems strongly suggests a battery technology breakthrough that Tesla plans to produce at scale. And while this is pure speculation, I won't be surprised if Tesla announces that it will be partnering with other automakers and licensing its battery and powertrain technology to them. After all, it aligns with their mission of accelerating the world's transition to sustainable energy, and it's not the first time they've done this. In 2012, Tesla was supplying Toyota with its battery and powertrain technology for their electric RAV4. Full self-driving. The progress towards full self-driving is deceptively rapid. Tesla is attacking the problem from both ends, at highway speeds with Navigate on autopilot, and now at low speeds in urban environments with Smart Summon. Data is how full self-driving will be won. This is how deep neural nets work, and Tesla's data lead appears unassailable. They're approaching 1 million vehicles on the road, each of them collecting data and training the self-driving AI. As more data is gathered and used to solve edge cases, new features will be progressively rolled out, making Teslas even safer, and before we know it, they'll be driving themselves. And each time a new feature rolls out, more full self-driving revenue is recognized. This will be good news. The Plaid Model S. Tesla are working on an even more ridiculous Model S. The Plaid version promises even greater performance and handling on a model that currently can do 0 to 60 in 2.4 seconds. The Plaid Model S is a gigantic fuck you to gasoline-powered vehicles. It's another nail in the coffin. It's also a warning shot for anyone wanting to compete at the high end of the EV market. The big deal here is that there will be other automakers, the likes of Porsche with their Taycan, and many more, who want a slice of that high-margin top end. But Tesla's technology lead is so big that they can outperform and massively undercut everyone on price. Good luck to anyone trying to rain on Tesla's parade. We saw what happened at the Nürburgring when Porsche tried to one-up Tesla. Analysts waking up. Though not inevitable, there is a trend over time for bearish analysts to abruptly reverse their outlook on Tesla stock. I guess it takes some longer than others to see the writing on the wall. If you really want to get a handle on this, do some Googling and look at what was being said about Apple or Amazon in the 2000s by these same folks. Each time the stock is upgraded or someone from a big investment bank improves their outlook, it bodes well for Tesla's stock price. With some of their track records, it's questionable whether anyone should be paying attention to them, but that's besides the point. And don't be surprised if we see a few prominent short sellers admitting defeat over the next year or two. Big automakers transitioning to EVs. Transition to electric vehicles or die. That's the choice facing existing automakers. Turning a huge ship around is a slow and painful process. Those with any sense now realise they must go all in on EVs or they're fucked. Problem is, shareholders want their dividends, executives want their bonuses, and few have the courage and vision to do what they know needs to happen. Watch as existing automakers perish or sheepishly announce huge layoffs, reduce dividends, slash sales forecasts, warn of tens of billions of new capital expenditure, and big losses. Each time this happens, it validates Tesla. The Tesla stretch. Because Tesla's vehicles are such great value, truly in a league of their own, a curious thing is happening. Buyers who previously had only ever purchased vehicles on the budget end of the market are stretching themselves $10,000 or even $20,000 further to get into a Tesla. This is deceptively important. Tesla are vacuuming up customers who were thought to be in the sub $30,000 market. This is greatly expanding their potential customer base. Those who think Tesla is a luxury brand only for rich people are in for a shock as smart consumers look at the overall cost of ownership and realize the Model 3 is actually cheaper and far better value than a lot of lower priced gasoline vehicles. The social change. People are increasingly becoming more environmentally conscious as the catastrophic impact of climate change becomes more visible in our daily lives. This social change is spreading. It's not an overnight thing, but eventually just about everyone will look down upon and shame those who don't care about the planet. As I said at the start of the video, I don't have a crystal ball. Tesla is a very volatile stock. It could do anything. I don't know what the stock will do today, a week from now, or in 10 years. but I am confident that the probability of the stock dropping meaningfully below its current level of around $330 is far, far less than the probability of a bumpy ascent to new heights. Tesla has dozens of strong tailwinds working in their favour and a sea of good news around the corner with very little in the way of major obstacles. If I'm right, and you're sitting on the sidelines waiting for the stock to drop as it passes 350, 400, 500, what then? Are you going to hold off even longer and keep hoping it drops? Will you bite the bullet and buy it for 20, 30, 50% more than it is today? Or will you simply remain on the sidelines wishing you had a time machine? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Thanks for watching. Let me know your thoughts in the comments. Do you agree or disagree? Any holes in my thinking? What other factors do you see impacting Tesla's stock price in the near term? Do you own any Tesla stock? And if you have any ideas for future videos, I'd love to know. I read all your comments and I really appreciate them. P.S. Guys, seriously, after my last video, a lot of you said you bought Tesla stock. I'm not giving advice here. I'm trying to teach you how to think for yourselves by sharing my reasoning process. Keep using that brain of yours.
So when maybe you or somebody else creates an AGI system and you get to ask her one question, what would that question be?
What's outside the simulation?